Hey Trey, this is Ryan with TrendLizard.com. I hope you're having a wonderful week and everything is going well with you. Thank you for the email. I'm going to take a look at TAN, the Invesco Solar ETF for you tonight. It was incepted back in 2008. Essentially, it's given us two moves over its lifespan. First, what looks like a three-wave down move into the 2012 low. Since that low, a three-wave up move to the upside that may or may not be complete. And I think that's where it stands so far. It's a tricky ETF to really get a grip on. I don't think we can really make a ton out of what happened to the downside here. Obviously, that was a huge decline, but it was a long time ago. It's not a clear pattern. It could be the end of a five-wave move. It could just be an ABC move. It's really hard to say. Obviously, what we do know is an important low was recorded in 2012. Now, if we wanted to consider the move off that 2012 low the start of a new trend, there's some problems. It's not the best move I've ever seen. You get a nice five-wave advance up into the 2015 high, but then you get this big, choppy, ugly pullback that retraced more than 61.8% of this up leg here. Not ideal. We always prefer that a correction retraced less than that, but it is what it is. It does look like it's a counter trend move. In fact, we know it's a counter trend move. It's pretty funky, but I think ultimately what happened is we had an A wave down, a three wave up for B, and then a truncated C wave in the 2020 decline, that COVID decline there. Should have moved lower, didn't, but still I think with the three wave nature of this B wave up, we're fairly comfortable calling this the C wave to complete a larger ABC pullback. So basically what we care about is what's happened off that 2020 low, and it's been a huge up move off of that low. Obviously, you went from I think about 25, a little bit below that, up to about 130, and then it's given a big portion of that back. So I think for your purposes, for anybody's purposes who's trying to trade TAN, I think really all we care about is what's happened off that 2020 low. So let's go ahead and zoom in and just look at this price action here. So this looks at it, obviously a trendy move. You could have looked at the price gain that took place and probably guessed just by that alone that it was a trendy five-wave move. I mean, we can, for one, say that it's a trendy move, but for two, say that based on the size of the 2021 pullback that it ended, and that obviously it's over, and something larger to the downside has begun. But this shows the subdivisions of that five-wave advance to the upside. Real clean move, real beautiful, great play. Obviously that ended. Now we need to find out what's going on in 2021 and when we can expect the uptrend to resume. So what I'm seeing just at the initial glance is what looks like a three-wave ABC decline for wave A to the downside into May's low, and then a counter trend recovery that's still in play off of May's low that looks to me like a B wave. So I think this is a counter trend move. The signs that we're getting, especially that the three-wave nature of this pullback in 2021, is a bullish thing, because it indicates that while you're getting trendy upside movement, you're getting counter trend downside movement, and that can only mean that overall the trend is still up. So that's a bullish thing. The problem we have is that the recovery effort off of May's low does not look like the resumption of the uptrend. Let's go ahead and zoom in and take a little bit closer look. This dives in a little bit more on that 2020 pullback in its entirety, and again, you can see that look of the ABC down move into May's low, which is again a bullish thing, because if we're getting counter trend downside movement, it can only mean the trend is up. The problem on the other side is that the recovery effort that we've seen so far looks like a counter trend affair, first with the ABC nature of this recovery off of May's low into June's high, but then also just the drawn out nature of the move, this choppy price action we're getting to the downside off of June's high. So this is what I think is happening. I think we have an A wave to the downside. I think we're in a B wave recovery that is not yet over, and I think we will ultimately get a C wave down to complete the move. Should move below May's low. No guarantees it will in this market environment. We're seeing a lot of truncated lows. Whatever the case may be, I don't think the 2021 pullback is over, but I do think the 2021 pullback is a counter trend affair. If we take a step back here, we see this yellow Fibonacci support area. Basically what this tells us is that we want to see this retracement, this correction retrace 61.8% of this big 2020 up leg or less. So basically we want to find a low somewhere above 61. As long as it finds a low above 61, it's going to be bullish overall, and I think it will. On a shorter time frame, again, I think wave B is not yet over. I think we'll see an up move that moves above June's high. I mean, it's really hard to say where that next high could occur, but we would expect it to occur above June's high, as it gives us a larger ABC up move for wave B. before it breaks down. So if you own it, I would basically be looking to exit it once it moves to a new high, once it gets moving up, maybe around the 100 area, as this up leg becomes similar in size to this up leg off of the May low into June's high. But ultimately, I don't think it's going to head directly higher. As I said, I think you're going to get a larger counter trend pullback, something that reverses back down once you start seeing any type of sharp weakness after it sets a new high above June's high. I'd be looking for a larger C-wave pullback, something that ultimately stays above 60, but should be a pretty big down move, something I wouldn't imagine you'd want to sit through as a larger correction forms. Once that correction completes, again, somewhere above 60, then you have a really good opportunity. You're looking for the start of a new trendy 5-wave move after we get that larger correction. So that's what we're looking for. Let's do one more thing. Let's go ahead and zoom in on the very short-term time frame, and it's just in reference to that price action to the downside here, whether this B wave within wave B is over yet, and if that next up leg has begun. In order to indicate that the next up leg to a new high has begun, it needs to stay above 81. As long as it does that, you can expect this strength off of August low to continue above 93 towards that 100 area before price turns back down. If instead it moves below 81, then we're talking about a larger B wave correction before you get that leg up to a new high off of May's low. Either way, it's kind of a choppy mess, just a counter trend affair, and ultimately we expect a larger counter trend pullback to form. But that gives you a little bit of info on the shorter term time frame. So I hope that's helpful, Trey. Have a wonderful evening. Let me know if you have any questions about this. Anybody who has not yet come visit our website at TrendLizard.com, please do so. We do this stuff every day. We're good at it. It works, and it's the way to untap the market. So have a great evening. We'll talk to you all soon. Take care.